Welcome to the Closing Beat, everybody. Happy Tuesday. Hope you're having a great day here. This is the Closing Beat. It's just a cool little fun stock market update show that we do daily to just kind of cover the overall stock market, the good, the bad, and the ugly, what's going on in the markets. And we're financial advisors. We just thought, hey, it'd be kind of fun if we made like a TV studio instead of having like a big stuffy office. So we're joining you here today from Jazz Wealth Studios. We're going to talk about the stock market. We're also apparently live on Roku now. If you look up the Investors News channel, it's a free channel on Roku. And apparently we're live on there as well, although I didn't see any promotion, people. Anyways, hey, we're also playing a game. It's called Guess the Dow. You go to the website there on the bottom right. You can guess the Dow. Where do you think the Dow is going to close next week? Closest without going over, we'll send you $100. Our winner this last week was Radhika. We sent the money out, I believe, today. 27312.5 was their guess, and they were the closest without going over, so congratulations there. Also, we're doing a class. It'll be live on YouTube. Usually, once a week, we do a class for customers, and it's Thursday nights at 8 o'clock. It's private. We only do it for them. We invite them only. This week, we're going to do it sort of public. We're just going to launch it, make it a live show. It'll be at Thursday at 8 o'clock at night, Eastern Time, and we're going to talk about sort of the geeky trading strategy stuff, more for the active trader. So if you're not an active trader, it may not fit what you're looking for, but we're going to cover that there as well. Well, we got the markets here lower a little bit. The Dow lost 25, the S&P lost 10, the NASDAQ lost 35. Sort of a, like I said yesterday, real tentative market here. Volume is very low. It's summertime, I get it, but volume is very low. People just kind of want to wait and see how this earnings season pans out. We had 10 companies report earnings today, this morning, right before the markets open. Every one of them beat on earnings. Only 6 beat on revenue, so an okay start, if you will. Retail sales came out today as well, also better than expected. That sort of makes it, I think, even more difficult for the Fed to try to raise rates or lower rates, right? Because retail sales came out at 0.4% month over month versus the 0.2% that was expected. If you take out autos and gas, which they make up a huge chunk, it's like 20% of the overall retail sales in this country. If you take them out and try to see like what else is good there, you get a beat by 0.7%. So a really, really good number there in general. Online had the biggest change overall, 1.7% growth in online sales. That's before Prime Day, right? We're still going through that. So that data is for last month, actually. And bars and restaurants actually were the second best performer. What's happening there, if you're interested, I don't know if you care, but in bars and restaurants, they're starting to almost beat the grocery stores. What does that mean? So you have this sort of decline where people spending money at grocery stores have been declining over the last 20 years, but people spending money at the bars and restaurants is starting to increase. That crossover pretty much at this pace is going to happen next month, meaning we all spend more eating out than we do going and buying groceries. Huh? Isn't that rather interesting? In fact, there's less than 0.3% spread between how much we spend at grocery stores versus how much we spend eating out. I know I'm a culprit there. I know. That's me. Anyways, let's talk about the stock market today. Basically, all was sort of flat to start the day. Trump had some comments that the Chinese trade war is a little bit further out than expected. And so because of that, you saw the stock market falling just a little bit. You've got a little bit of running out of steam here if you look at the stock market in general. So, like I said, the volume's decreasing. You've got the volatility a little bit lower. In fact, let's just go over to the charts here and try to show you what's going on. If this is the S&P 500 on the screen, you can see the trading ranges starting to become more narrow. By the way, this is our dojo. We give this to every one of our customers here. You have access to go in and look up stocks that you may be interested or follow the ones that we're following. So anyways, trading range getting real narrow. And as we've been making this last leg up here, if you look at any other chart with volume, I don't have volume on mine, but if you look at the volume, it is tapering off rather sharply. Well, what does that mean? It means that, number one, people are looking for a catalyst. Give us a reason why we should buy more stock, why we should invest heavier. That's what people are waiting for. That catalyst could be earnings season. Remember, this earnings season, analysts have set the bar really low. We covered this yesterday to kind of explain how low they have set the bar. where analysts have basically said, we expect earnings to decline by 3%. And so because of that, we did a little study. We looked back to see when they do have earnings that are sort of at that low of expectation, what does the S&P 500 do? And on average, the S&P 500 gains about 4% when the bar is set really low. So one of the catalysts that people could be looking for is a good earnings season. Not great, but just an earnings season that beats what analysts are expecting, because it'll seem like really, really good news, right? If the smartest guys in the room were expecting X and we did X plus 0.1, then that might be good enough as far as a catalyst to push us higher. Other than that, if we don't get an earnings season that's really sort of stellar or even slightly better than expected, what happens is you see a market pullback that would be expected. You wouldn't panic. You wouldn't say, oh my gosh, what's going on? You would be totally okay with that if the markets did happen to pull back, just because there's nothing to go on. You got Trump saying the trade war thing's going to continue as of today. He says it's going to take longer. You got the Iranian negotiations there supposedly getting better, but that was Trump. And then later on they said, well, maybe not so good there. So you don't really have a lot of good reasons for the stock market to just get super excited and blast off there. So that's the S&P 500. Overall, you got the NASDAQ down just a little bit on the day. It's also doing well, but running out of a little bit of steam there, and that's okay. The Russell was okay, had a good start to the day, but is lagging in general. Mid-caps also. How about we use the MDY to take a look at mid-caps, just an ETF that looks at mid-cap 400. Yeah, mid-cap 400. So in general, not bad today. Considering a little bit of relative strength there, however, not exciting, and is still lagging behind. Those are the two areas of the market, index-wise, that are lagging behind just a little bit there. Not by a whole lot here with the MDY. All right, that data that I gave you, what we talked about before, where you have the we talked about the analysts setting the bar really low. Anytime analysts have set the bar this low or lower in the past, you actually have a good gain for the stock market. We said the 4% there, and it only actually lost one time in the last 7 times. And it only lost 0.25%, so it really wasn't that big of a deal. Also, I want to point out volatility. Can I pull up the volatility? I don't know if I have this one plugged in. Yeah, it's got this bad tick in there. All right, so volatility sitting near lows here in general. Now, I saw a study today. It was not my study, so I can't claim this one at all. But it said, hey, let's study this. Anytime the VIX is at 13 or lower before earnings season, how does earnings season play out? And earnings season shows an average gain of 1.1%, meaning when volatility or fear is lower than 13, as far as looking at the VIX futures, that earnings season produced a gain in the S&P of 1.1%. When the VIX was over 13, it was actually a loss of about 0.25%. So it gives you sort of a little bit of a hint that we've got some tailwinds here, right? You know, they always like to say tailwinds and headwinds and all that stuff. It lets you know that at least through earnings season, the bar has been set low. Historically, that's good performance for the S&P. Also, volatility is low, and historically, that's good performance for the S&P. I'm not saying this time can't be different, but if you are one of those people that says, I'm going to play the odds, see what happens here, you know that the odds are on your side for at least a favorable bounce. And remember, July is a very, very positive month. The NASDAQ averages a gain, I believe, of almost 4%, 3.36 if I remember right. So you've got that going for you as well. Typically a good month for the S&P as well. I think I just said that backwards. The S&P averages that gain. The NASDAQ was about 4%. Anyways, you also have all eyes on the Fed. We mentioned this. You got 5 Fed speakers talking this week. President Powell included, so he'll be talking as well. Beige Book coming out tomorrow, and is there going to be a rate cut at the end of the month? Right? Basically, they've all but confirmed it. They said we're cutting rates. Now it's just a matter of by how much, a quarter point, 2 points, 50 basis points or 25 basis points. We'll see what happens there. You got good econ numbers, right? So retail sales came out, they're looking good. Housing, home builder sentiment came out, that was looking pretty good as well. I don't know. I don't. You can make the inflation argument maybe, but I'm sort of amazed that cutting rates is in the cards, unless they're thinking like, okay, it's just going to be like an insurance cut. That's what we're going to look at this as, like an insurance cut, and we'll just hope that it doesn't really hurt the market. We've shared those studies with you. You know that it actually is not a good thing if they cut rates in the long term. In the short term, yep, you do tend to see a little bit of a bounce there. So that's that one. All right, let's take a look through the individual sectors. We'll pull up the charts here and see what we got going on. If you're in the dojo with me, you go up to the top, you see, hey, transports, they're near the top of the list. What's going on there? Well, J.B. Hunt, right? J.B. Hunt makes up just over 5% of the IYT, if that's how you choose to follow it. And J.B. Hunt had a great day today, moving back to the 200-day moving average, about 5.5%. And again, it makes up about 5% of the transports. Did a little bit more digging for you, and the two top leaders in the IYT, if you like playing this sector, is Norfolk Southern. That's a railroad company, and sort of interestingly enough, so is Union Pacific. These guys make up almost 20%. Just those two stocks make up about 20% of the IYT. They both had a good day as well. Let's take a look. Kansas City Southern's in the top 10 as well. But I think that one, 1%. That's not a bad day. So Kansas City Southern not doing too bad there as well. So from a transports perspective, you got J.B. Hunt with the earnings. That's a trucking transport company. And the rail's doing quite fine as well. There's overlap in there, right? Trucking company uses rail. You get what I'm saying. Anyways, home builders. Next up on the list, you had stronger housing sentiment numbers today, except for like in the Northeast. I think there was a little, I didn't have that data on me, but that was the only area where both sentiment was lower and forward projections were lower. Didn't seem to bother the home builders because a lot of their activity, a lot of these big companies, over in the West, right? So you got to go further over to the West, and apparently they're just killing it over there. So looking pretty good there. In the short term, I thought this KBH, if you like these short-term technical patterns, I'm not making a suggestion at all, but if you like the breakout or the possibility of a breakout, not only do you like this resistance here if you're a technical trader, you also like the way this closed near the highs. That's letting you know something right there. Can I zoom in just a little bit? Oh yeah, look at that. So what this is telling you here, if you follow candlesticks, what this is telling you here is this likely would have continued if the market didn't close. Right? If you're one of our customers, go into the video library. I'll click over here. You go into the dojo. These are all our private classes. But right here, just sort by categories. Go to, I believe it's Wine and Wealth. I won't stay long on this. Candlesticks, part 1, 2, and 3. I did 3 classes for our customers on this so you guys can understand what you're looking at there. Just hop on over into the dojo real quick and check that out if you're not familiar with this. But if I go over to KBH, I told you guys a couple weeks ago I was going to point out interesting technical patterns, not suggestions or recommendations. These are just simply like, hey, I mean, if you own the stock, you're pretty happy. If you've been thinking about buying it, maybe this gives you a reason. I don't know. But you like the way this finished today. So basically what I was telling you, like I said, the momentum was to the upside, and if the market didn't close, wouldn't people just continue to get excited? There's a possibility of that. So I thought KBH was an interesting short-term sort of pattern there. Speaking of short-term, that class that we're doing on Thursday is going to be focused on that. If you're an active trader, we're going to go over the geeky details. How active do you need to be? How successful in your activity do you need to be? You will be surprised. I'm going to share a story of a trader friend of mine who loses 7 out of 10 times and still is a very profitable trader. He's actually online, does this thing every single day, has a class that he offers, and he loses more than he wins. How can that be? I'm sorry, he loses more times than he wins. So we're going to cover some of those geeky details and may have something interesting to share with our customers there. If you're interested, that's the last time I'm going to market that. Is that okay? I'm not going to mention it anymore. Don't you worry there. Okay, so let me zoom back out here. We're going to take a look at the XLF. So we had some banking stocks reporting earnings, and that's going to continue going forward. We'll cover that in a minute. Banking stocks basically taking a break. Just pull back up about 0.25% today. It's an undervalued sort of sector. It's getting attention, right? But overall, banking stocks took the day off today, as well as the semiconductors. And remember, I always say you need the tech and you need the banks to get this market rallying, and you lost about 1% on the semiconductors. Not a bad thing. There's no like horrible news where maybe the China news kind of plays in there, but nothing that says, oh my gosh, should I run for the hills? It's just telling you, look, we took a deep breath in almost both of those areas, and now we just need to sort of relax a little bit. And if you see that pullback there, especially if it's calm, you really wouldn't mind. On the downside, it's going to be oil. Oil had a really rough day today. We'll look at the USO to highlight that. About 2% to the downside there. You got the news that we're sort of figuring things out with Iran. At least that was the early news. And so that sent oil prices a little bit lower. Also, production's getting back online there in the Gulf of Mexico. While I was gone last week, apparently Hurricane Barry came through, shut down production of a lot of those oil refineries. I don't buy that so much. I think most of this today had to do with Iran, because that was not a lot of production there in the Gulf of Mexico. So you're having a hard time convincing me anyways. Okay. Anyways, we have, let's do what we normally do here. You got 81% of the S&P over the 50-day moving average. Just a small downtick, right? Financials getting most of the attention there. 90% of those stocks are still over the 50-day moving average. You had 58 new 52-week highs, right? That's about 11.5% of the S&P 500. Yesterday, it was about 13% of the S&P 500. We had 66 names. But the markets didn't do anything. It's not like we had an incredible rally. What's going on? Why did that happen overall? We haven't seen that in a while, so I think that's rather interesting. It's been about 2 weeks since we've seen that happen before, so I'll keep the same comments there. All is looking good in that respect, and most of the stocks in that category are in really nice downtrends. So if we go over here and look at the charts for you, most of them in, uptrends, power uptrends there. You have a couple things that are interesting. Symbol LIN. Lind, oh, it finished lower. I'm sorry. No, this one's going to be tough. So this one was hinting at a little bit of a breakout there, but the fact that it closed at the lows, you would know from the candlestick classes and stuff, that's not a good sign, actually. So Lind was hinting at a breakout. It's still a chance. I mean, maybe it recovers tomorrow and reverses. That's about the only way that would be interesting. NASDAQ. NDAQ, if you take a look, it poked to new 52-week highs today, but this is a great example of a stock that's extended in the short term. In the short term, you may look at these 52-week highs, get excited, and try to play that momentum. Some of you like that. That's okay. However, you don't want to jump into something that's extended in the short term or what's known as overbought in the short term. We did a class for our customers as well on that. I think this would be perfectly okay if this calmly pulled back here. I just wanted to share that with you. And also, ICE is a very similar one here as well. We pointed this out yesterday. It poked to 52-week highs. It was unable to close positive again, and I think that's understandable, right? It had a great run, a great string of winners in there, and so totally understandable as far as new highs. On the new low list, you have the same actors, right? You got the SWN. We're in energy space here. Now, this is becoming more interesting if you like the counter trend stuff. Not there yet, but you notice how we've been, like almost every other day, we say new 52-week low on SWN. But now it's starting to give you that accelerated drop to the downside. I don't like the price of this stock, but if you like the counter trend waterfall sort of thing, that may grab your attention. And then the other one was Energy Company as well. It's just been flirting with making new lows. It did today, down 3.5%. Weakness in oil. When there's weakness in oil, think of that as the sector, right? So the price of oil suffering today, and that's okay, right? Having a little bit of a rough day. Where do you think the active traders go? If you notice that a sector is weak, wouldn't you want to go play the weakest stocks you can find in that sector? If tomorrow, for some reason, oil rockets higher and the sector is strong, are you going to go try to pick on the weakest group in there to make some money? If you're an active trader, right? No, not at all. You're going to look at the sector and go, all right, oil's really strong. What is the strongest oil stock I can find that's not extended in the short term? That's where you're going to go. That's where all the active traders go. So today's a great example of that, where you recognize weakness in a sector, you go short the stocks that are the weakest. I mean, I'm not telling you to do that. I'm just saying that's where traders go. The strongest sector today, transports. You go real quick, just like we pointed out. You got the rails and you got J.B. Hunt. You go look at those and you see, is there something I can do there? You might not like J.B. Hunt because of that big gap up today. You know what I'm saying, right? I think I should just stop there. Okay. A couple stocks in the news, and then we'll take your questions if you have any. You can ask questions now on Facebook, LinkedIn, Periscope, YouTube, of course, and maybe one other, but I forget. Anyways, moving on. Blue Apron Holdings up 35% today. Textbook definition of a short covering rally. If you like the idea of active trading or you're a technical trader, you want to learn the term short covering rally, because that's exactly what you saw today. Blue Apron came out with an announcement saying, hey, guess what? In our meal kits, we're going to offer Beyond Meat products now. All right, that's good news. They needed good news. This is a very, very tough company to get excited about. And basically the response today was from people that wanted to buy that. They thought, okay, this is the bottom. What it does is it causes all the short traders that are betting on it going down, it causes all of them to be forced to start covering their positions. All of a sudden they're losing, right? They're losing 1% a second or 1% a minute or something crazy. You can't afford to hang on to that. And maybe some margin issues in there too. I don't know if that was a big enough move. 35% probably would be if you had a big position. So that's the other thing to keep in mind. If you do bet on this stock moving higher or lower, it's a $7 stock. Are you going to buy 10 shares of a $7 stock? No. right? It's a $7 stock. You're like, wow, I'll take 100 shares, 1,000 shares, right? So think of those bigger short investors. They don't have small positions. They've got larger positions. Well, when a larger position starts moving against you, you react quickly, and I think that's exactly what you saw today. Textbook definition there. In my opinion, you can disagree with me if you'd like. It's okay. Domino's Pizza, a little bit lower on the day. Slower sales. Apparently, we're all spending money eating out at bars and restaurants, just not Domino's, because Domino's was lower by 8.5%. Roku, speaking of the new platform that we're on here live apparently today, hit new highs, new all-time highs, by the way, added 7%. It's up about 250% on the year, just this year, right? They got earnings coming out August 7th. Is when earnings come out there, and just a great move. Overall, very, very powerful stock. And notice how it got a little ahead of itself. It took a deep breath out, took a break, got back to a normal, reasonable, average area you could buy, and people decided to buy that. So, little lesson there without making sort of getting in trouble. We are SEC registered financial advisors, and so, we have to be careful what we say, so sorry about that. All right, so we covered Domino's Pizza. Goldman Sachs was higher on earnings. They had good revenues there. They're a monster. They, like we pointed out yesterday, they know how to play the earnings game. J.B. Hunt higher. J.P. Morgan higher, also stronger revenues. Wells Fargo, by the way, I know some of you really dislike Wells Fargo. They're working on it. They're getting better. They're trying. Stock was lower by 3%. Earnings and everything were good. Revenues were fine. They had to pay more to get you guys to come to them, right? High interest savings, interest-bearing checking accounts. They're becoming extremely competitive by non-bank companies, right? I would love to add that here at Jazz Wealth. In fact, Aaron, if you're watching at Galileo, please call me. I would love to offer that. But Wells Fargo said, hey, in order to keep and attract customers, we had to raise our rates. So they were used to paying 0.89% on interest-bearing accounts on average, right? They had to raise it to almost 1%. What happens there? That eats into their bottom line. When it eats into your bottom line, investors go, well, you're not worth as much then, right? Stock sells off a little bit. You got a 3% decline today. That's one of the weaker, if not weaker, areas of the financial area at the moment. All right. What else do we have here? Tomorrow, we got housing starts, building permits coming out. We got the Fed's Beige Book. That's going to be a primary focus for the day. You've got earnings from Bank of America, Blackstone, PNC Bank, all coming out before the market opens. U.S. Bank also reporting, so a big day for financials again. And that almost wraps up the sort of large financial earnings there. We sort of knocked those out in the beginning. Then after hours, you got eBay, IBM, but nobody cares because Netflix is going to be the one that reports earnings. Fair warning, let's pull up some data here for you. Netflix, well, all right. So Netflix averages a gap of 1.3%, meaning from where it closes tomorrow to where it opens the next day, average of 1.3%. But don't let that mislead you. If someone tells you that kind of data, you go, oh, that doesn't sound so bad. No, it can be bad, right? Last earnings report, the exact gap was 1.5%. Right? The earnings gap before that was only 1/3%. But listen to this, 9.2% 3 earnings reports ago, negative 13.3% 4 earnings reports ago. Then you got a positive 7, positive 12. I mean, imagine. You're basically playing with a biotech stock here. So if you own that stock, I know it's been flat. I know you guys have been asking like, what's moving sideways? Should I take my money and do something else? Tomorrow's the day to find out. Right? You could have a rather large gap. The good news is, I'm going to put it up here for you. You've got resistance and support rather close. And I say rather close in Netflix terms, not in general, right? Because that's $30 right there. So to the downside, you got resistance here around a 200-day moving average. That's a $30 move to the downside. You're talking 8%, something like that. That's nothing to laugh at, but it's still, you've got a range to work with. On the upside here, you got 380, say 382 or so for these prior highs. Anything above that, y'all are going to be happy anyways. You've got all clear skies ahead and more of an official breakout in the sort of midterm. So I think it'll be interesting. I definitely think it'll be interesting. And now that is all I have to share with you. Yeah. And I was right on a 20%. 20.1% of the overall retail sales are made up of cars and the dealerships. So when they report the retail sales numbers, you'll always see retail sales and then retail sales X autos and dealers and gas or something like that. Because what that does is it takes out sort of the heaviest hitter, and we get to see a glimpse of more of a sort of a, I don't know, a larger pie without being skewed to one side. If you have a 20% weighting, just like in the IYT, if you have two stocks like that, Norfolk Southern and Union Pacific, really it's what those two do that sort of drive the rest of the sector. It's the same thing in retail sales. We always like to see that, right? So outside of that. And then the second largest one is actually online. So online sales, retail sales make up 12.5%, followed by food and beverage, if that helps you out any. See if I can answer some of your questions, and then we'll wrap it up from there. You've been doing your buys every Monday since 2019. Dollar cost averaging. Friday's usually bad news. Market down. You nailed it. Good job. What is the Fed's beige book coming? So the beige book comes out tomorrow. Yeah, it comes out tomorrow, and it's sort of a backwards looking thing. It's not when they make the rate announcement. It's not like the minutes of their meeting. It's sort of their economic report. It's already been put together. It already exists. I believe they started it on Monday. If I'm not, I might be wrong here, but I think they do it 2 days ahead of time or the 2 days leading up to it. Then they sort of release it. This is backwards looking data. The only thing people are really looking for here is changes in their comments relative to what Jerome Powell just said last week. If last month he was jotting down and they were working on stuff and they had these comments, and only a month, not even a month later, he's changed his comments, what he did last week in his press conference and everything, then that's what people are looking for. So it's not like a huge market mover, but it'll definitely grab some attention. Yep. A lot of chat that Netflix is in trouble long term. Well, I mean, they borrow a lot of money. No doubt that they're growing. I mean, it's sort of hard to deny that, but yeah, they borrow a lot of money, and as long as money remains cheap and very accessible like it has been, then they're okay. It's kind of like Tesla, really. Roku has a new high and probably new resistance level. Yeah, we talked about that. Hit a new all-time high. I just keep thinking about that analyst. I mean, one of the first days of the year, an analyst came out and said that's his top stock pick of the year. We pointed it out on the show, and I was like, all right, whatever. And he gets to keep his job because he nailed it, right? They nailed it. Jordan says, Netflix lost a major TV show. Was it Friends? I remember they lost Friends, but maybe there's something else. I don't follow the shows on there. I no time, really. I love it. Well, I think we basically answered your questions there. Y'all pretty quiet today. I appreciate... Oh, The Office, not Friends. It was The Office. Yeah, Jordan, thank you. They lost the reruns of The Office. I was thinking Friends for some reason. Do you think Daimler can move even lower as a recession? Yeah, I saw something that they were pretty weak overall sales-wise. I don't know for a fact. That's not one that I study or have studied anywhere recently, so I couldn't actually say specifically there. Yeah. And what do we got? Dustin, what do you think of Nordstrom? Nordstrom, you like the falling knife sort of thing there? Is that your deal? You like playing the bottoms there? It just hasn't been the same since they didn't take the company private. They were going to take it private. It was all exciting for a while. They couldn't get it done. The family couldn't get it done. What's the reason? What are you excited for? Why do you want to buy it? If you own it, you're just hanging on for dear life. You may not like that it makes new lows. I just don't have anything good to say as far as, yep, this is the bottom, or yep, this seems like a good opportunity. Fundamentally and technically, it's just super out of favor, but not to the point where you can say, I'll take my chances. That's my sort of 2 cents there. Yep. There you go. What happened to Western Digital? Did I look at that one today? Western Digital, just a normal pullback, right? So let's look at the stock here. So the stock had a great run, just like the market, right? After all that decline there through May, this looks very similar to the stock market, had a great recovery run, better than the sector as a whole, and now just pulling back, taking a break here. I get it, that's a lot to swallow all in one day, but at the moment, I wouldn't look at that and say, that's a reason to run for the hills, in my opinion. You like The Office there? Thank you. Thank you. I'm having fun with it. We got a lot more to go on that one, but still working. Still working on it. Cool. all the Trump roar, is it having an effect on the market? Today it did. Yeah, today it definitely did have an effect on the markets, especially intraday. There was a lot of activity there intraday when those comments about being far away from the China trade war. Remember, you got election season coming up too, so that's going to be a bit of a exciting time. Yay. Microsoft pulled back 1% today. Not a big deal. I think, Harrison's saying, you think it's a darling stock to hide. Not sure what that means, but you as someone that's either interested in investing in it or a current investor, you want these pullbacks. If you own a stock, I get it. We never want to see a value drop in anything we own, but that's what creates the health of the stock. That'd be like saying all you do is breathe in. You can't do that for very long, right? You want to breathe in and breathe out a little bit, right? We don't ever want to have massive inhales and massive exhales to the point where we're coughing and everything. Same with a stock. You want little breaths, little heartbeat going along there. That's the analogy I use all the time, and I keep that. So I like the idea that Microsoft is pulling back with the NASDAQ wanting to pull back a little bit there as well. AMD, same thing, a little extended in the short term. Semiconductors took a day off. If the China trade war thing is going to take a little longer, you expect to see some pressure there. I think that would be, I think that'd be okay, right? Never too far, too fast. I got a question on Home Depot. Not sure what the question is, but nice and strong stock there, not too extended in the short term. Do you notice that the more we look at these stocks, the more the comment is, okay, seems like it wants to pull back, maybe a little pullback, maybe a little pullback. Right? Think of the markets. If all these stocks are a little bit extended, wouldn't it be okay if they all pulled back just a little? Get your mind right around that so we're playing offense here rather than defense. The markets fall for the rest of the week just sort of slowly, and you are already expecting that, you're no longer emotional, right? You're like, that's cool. I'll take it, man. That's fine. Sorry if I missed a few questions there. You got a lot of them going on there. Lowe is not a stock, I believe. That is not, do you mean Lowe's? The Home Depot competitor there. So Lowe's is the sort of underdog in the match at the moment. It's hard to want to buy something like that if you can see the clear leader, if that's the stock you're talking about. Yep. What do you think about Afterpay Touch? Have you heard about it? No, it sounds familiar, but I think I'm thinking of that Zoom or Shoom. PayPal launched something today. I think it's in the scroller below. PayPal launches Xoom, Xoom. It's an international money transfer service. 31 different countries, by the way. Is it too little too late for them? Right? Why do we need that? Aren't we just forcing people now to use crypto or whatever Facebook comes up with? Stock was down 1% today. Obviously, that that announcement didn't move the needle. All right. I think I've done everything I need to do here. I'm just checking. Netflix, by the way, beats on earnings 85% of the time, revenue 62% of the time. But remember, wild gaps. Wild gaps on that one. We'll talk about it. We'll, of course, be here. They report after the close tomorrow. I appreciate you guys watching. We're going to wrap it up here, and that's it. We'll see you tomorrow. Thanks for watching. Thumbs up, all that good stuff if you're watching on YouTube, and we will see you tomorrow.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.